Hello there, this is James and you're watching Tixee Live. In today's little program, we're just going to do a bit of a recap of what just happened literally, 50 minutes ago and the implications of that. So we're going to have a look into that. Then, of course, I do my usual Friday wrap up the week and have a chat about, what this week has been. And we are back. We are indeed. What a week it's been, because it's been an incredible week, and what a way to cap it off. But anyway, before we get into all of this, don't forget, these little episodes are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence, and of course know the risks at hand before entering any trade. With that out of the way, I don't know. Sorry, I'm a bit exhausted after all that and then rushing in. So do bear with me. Okay, so let's get started. Where do we start? Well, the announcement which just happened, say 50 minutes ago, was a shocker. Inflation in the US has basically hit a new 40-year high. 40-year high. And it hasn't been like this since 1981. So, yeah, it's a big surprise. Obviously, the market has been geared up to this event pretty much throughout the whole week, with building up to this. But that US CPI year on year was announced at 8.6% versus 8.3% expected. Okay, so a lot, higher than expected. But here's the thing. The expectation was 8.3%. That was what inflation was previous month. So they were expecting it to be like this, but it's not. It's done that. So that's a big surprise as well. So that's a big shocker. US core CPI is announced at 6% versus 5.9%. Now that's again higher than anticipated. But here's the thing to bear in mind. Okay, it was expected at 5.9%, but came in at 6%. Last month, it was 6.2. So in some ways, there is a slight drop off. Okay, so in the last month, but it's still higher than they anticipated. Okay, but I think the real shocking number is at 8.6. Okay, is that 8.6? Those who were with me earlier on and watched me do the live, don't forget the difference between the US CPI and core CPI is core CPI, okay, doesn't include the prices of food and oil, the fluctuations of food and oil. And obviously we all know where oil prices are at the moment. So that's why it's slightly different. So overall, all four, okay, came in higher. CPI month on month, 1%. US CPI, as we said, 8.6%. US core CPI month on month, 0.6%. US core CPI year on year at 6%. So again, a lot higher than, so the 8.6 is a shocker. But again, like I say, even if you look at it, US core CPI month on month is actually the same as it was last month. So, so that's got to give the market a little bit time to sort of digest it. But it's that 8.6, which is going to take the headlines at the moment. So how did the market react? Well, those who were with me during the live, initially what we saw was dollar strength. Okay. Then literally 10 minutes after I'd finished, we saw a little bit dollar, some of the things straight back. And there's one thing in particular I want to look at. Okay, and I'll bring my chart up in a minute. One thing I want to particularly look at, okay, and share it with you. And those individuals, unlucky individuals who know me, one of the assets I'm going to talk about, they know I never stop talking about it. And there's a reason for it. It's because it's the very first thing I ever personally traded, so I'm quite attached to it. So anyway, let's pull up the charts and have a look. Okay, first of all, this is US dollar, Japanese yen. Okay, we do it on an hour chart. Okay, initially on the back of the announcement, okay, it fluctuated, and it initially did move higher. Okay, but then we saw a little bit of a sell-off. Since then, okay, the dollar's gone back to strength again. Okay, but this is, and if we look at the 30 minutes, you can see how dramatic it was. That was the initial reaction. Then it started to sell off, and now we can see it beginning to bounce back again. Still above that key trend line, of course, which I'm keeping an eye on the US dollar, Japanese yen in particular, because, like I say, there's a lot to talk about that. But this is the one I wanted to talk to you about. This one. This is gold. Okay. And those individuals who know me, they know I'm a massive gold bug, because I traded gold. It was the very first thing I traded. And the fact of the matter is, when I first started trading gold, it was trading at $632 an ounce. So it goes to show how old I am. But this is the thing. Initially, on the initial announcement, when the inflation came out, okay, gold came under pressure, and it tested this key level I've been watching for, like I say, since the middle of May. Potential area of interest, $1,834.87. Then, literally, a little while after that, it skyrocketed back again. Okay, and it actually went to the high of $1,845 before we start seeing a sell-off again. Okay, we're still hovering around this key level. So this key level is still an area of interest worth watching. But that sudden movement made me wonder. Okay, because remember what I said earlier on. Okay, when you have times of concerns, I think this gentleman asked me about crypto crash. Obviously, I'm not looking at the crypto, so I can't say. But what I did say is that cryptos are riskier, are considered risk assets. Okay, so at times of concern, you see that investors move their money out of risk assets and into safe havens. And I mentioned US dollar being a safe haven, Japanese yen being a safe haven, and US dollar Swiss franc. In fact, we'll have a look at US dollar Swiss franc as well in a minute. And I did say at the time, gold at the moment is not using its safe haven powers, so to speak. So that sudden movement, okay, did make me think for a second, maybe, just maybe, obviously this level here, this is need to keep an eye on this, see if it holds or if it goes under the level again. Just made me wonder, this sudden skyrocket, maybe wonder for a brief second, maybe that safe haven status is coming back. But anyway, it'd be interesting to see how gold reacts. Bear in mind, we have the US session is opening up in 2 minutes. So we're going to have a quick look and see how that reacts. Stock market wise, no surprise. Okay. S&P currently under pressure. Tech, also NASDAQ, also under pressure. Dow Jones, also under pressure. That all makes sense. That makes sense in a fundamental fashion. And the reason for that is that, clearly, because the inflation is quite scary. And don't forget, the Fed's target for inflation is 2%, 8.6% is quite a bit higher than their target. Yes, we are expecting them to raise interest rates next week by 0.5 basis points. But there was hope if the inflation started to slow down a little bit, that maybe they won't be so aggressive the following rate hikes. Now the market's thinking they will be more aggressive because they seem to be very, very, very hawkish in this. So the market is now sort of looking at it as in, yeah, they are going to be maybe doing very aggressive moves in the future. And here's the thing, this is the worry, okay? If they increase interest rates too dramatically, too aggressively, because we have signs of economic slowdown, the economy won't be able to handle those high interest rates, okay? So that could tip us in to the dreaded R word, recession. So this is why the stocks are reacting like this on the back of that. But yeah, big shocker, big news. It'd be interesting to see where gold is during the US session, how it reacts and how that develops. I'm just wondering whether or not, because like I said, I'm a gold bug. But anyway, this week, what a week this week has been. Let me just go through some of the stuff this week has been through. Oh my God, indeed. Thank you. I like you. Thank you very much for the comments. I love it. What a week. What an absolute week this has been. absolute week this has been. This is probably why I'm slightly exhausted, but at the same time brimming with excitement. So let's start what week we've had. Okay. Monday. Let's start off with Monday. What happened Monday? Monday, Boris Johnson, the UK Prime Minister, was had to go through a no confidence vote with his party. So basically, his rebels in his party who wants to remove him as leader. So he had to do a vote of confidence. And initially, the market reacted in a fairly bullish fashion for the British pound against the US dollar. The British pound tends to be quite politically driven, actually, when politics does affect it a fair bit. So it was quite politically driven. Then when the vote came out, and it turned out that Johnson had won the vote of confidence, but just won it, and he had a majority of 63, the sterling went the opposite direction and became bearish. Reason being for that is that politics, though it's politics, it does affect economics, obviously, because a change of government does affect monetary policy. So this is why the sterling came under pressure. And that also gave a little bit of uncertainty on, and we don't need uncertainty at the moment. We're facing record inflation, we're facing challenges with supply and things of this nature. We need stable political leadership, not unstable political leadership at the moment. We need stable. So the problem is, theory is now that obviously Theresa May, Boris Johnson's predecessor, went for a similar vote a couple of years ago. Oh, that's very nice. Thank you, my friend. Thank you. Thanks again. Oh, brilliant. This is what I'm here for, guys. This is what I'm here for. So thank you really much for that. Your absolute pleasure. And it's been a trading week, isn't it? It really has been a trading week. It's really nice. Thank you. So that's how the cable, because like I say, Theresa May, his predecessor, went for a vote of no confidence, and she won with a higher majority, or around about 82 people. Okay, 82 majority, but she still got ousted as leader 6 months later. So the question is, how long can Boris Johnson or Bojo stay in power for? So that put a little concern, and that's what happened with the cable. And that's just Monday. Then the Reserve Bank of Australia, they announced their interest rate decision. The market anticipated them to rise it by 0.25 basic points. They didn't. They shocked the market and they raised it by 50 basic points. The reaction was market then got scared. Why? Because they thought if the RBA could be this aggressive with rates, what stops the Fed, the Bank of England, and all the other central banks being this aggressive too? And don't forget what I mentioned, the market is fearful, is because if we raise interest rates too quickly, this is how they're feeling, it's going to affect, and growth is slowing. We're not going to be able to, the economy is not going to be able to handle it. So this is why then the market went on that. And that was RBA. Then, look, I've got some notes here. I can't read my handwriting as well. It's terrible. I wrote it down really quickly. Yes, BOJ. No, first of all, it's Target. Yes, there we go. Target. This didn't move as much as I anticipated, to be honest. It did move lower. Target once again came out and declared that their forecast for their quarterly profits was downgraded again. And that was twice within 3 weeks. They've downgraded their forecasts. Yes, their share price did open lower, but it wasn't a big shocker to the market. It wasn't as dramatic as I thought it might have been. And then Japanese yen. Yep, Japanese yen, which is an ongoing story, actually, because there's a new development on that, which I'll share with you as well. The Japanese yen fell to a 20-year low against the US dollar, and it's still trading around that 20-year low as it stands. Okay, and then there's the question will the Bank of Japan intervene in one way or another? Will it jump in and intervene? And don't forget the difference is US interest rates is 1%. Bank of Japan, their interest rates is 0.10. They're negative 0.10%. And the question is, will BOJ intervene? Because I say, but then there was comments that a low yen is good for the Japanese economy, and this jazz. And there was questions then being asked, is this currency manipulation? So yeah, the yen is still under pressure as well. We're still trading now 134. Questions are really, are we going to hit 135 now with the dollar yen? There was a little bit of chatter this morning that an FX consultant or a top FX guy in Japan is monitoring this, and might intervene or might do something to try and get a bit of yen strength back. I just think you're saying the statement for now, just to see if the yen can get some strength. So yeah, so that was it. And then obviously ECB, cool, blimey, ECB on Thursday. ECB surprised nobody, surprised no one. They didn't increase interest rates on Thursday. However, they did say they're going to stop their asset purchasing program on the 1st of July, and then they will raise interest rates by 0.25 basic points in July. And then they say they will then look at increasing interest rates again in September. And they may look at increasing it by more. Okay. So initially the market got excited, or the euro bulls got excited, and the euro started to move higher. Okay. Then the press conference happened, and Christine Lagarde, she obviously said that inflation was a huge problem. I think it's 8.2% in the eurozone at the moment. And she said, and this again gave the euro bulls a bit of a boost, that depending on the monetary, the economic situation, come September, when they decide to increase interest rates again in September, they may add what do they call it? Increment on the rate. They might not just raise it by 25, they might raise it by 50. So that gave the market a bit of a boost. But then as the press conference went on, she was answering questions, and they asked her, okay, why aren't we doing the 25 basic point now? Are we definitely going to do this? Is 50 going to be happening in September? And all she would say, she wouldn't commit, obviously, to anything. And she basically said this is a change of regime, her words, regime in monetary policy, and change in what they can do. They basically have the tools to do what they wanted to do. And I took it, and I watched the press conference as well. I took it as doves disguised as hawks, because it was very dovish, and the market took it that way too. And this is why we see euro currently under pressure. And like I say, euro is currently trading at 105, 10536. Where was it trading at the beginning? Yeah, at the announcement and the beginning of it, it was trading about 1.0745. So yes, you can see that that press conference was not taken as hawkish. She was taken as dovish. So this is where the euro is at the moment. And that was yesterday. And then today, we all know what happened today. CPI. So again, that's a shocker. Yeah, that's a shocker. Yeah, we're seeing dollar strength of gold at the moment. It's currently still testing that level. It's currently trading at $1,831. So yeah. Okay. So anyway, yeah. So what a week. What a week. It's been a really eventful week. I've enjoyed it. I'm exhausted, excited, but I loved it, because I love the markets. Good thing, because I've been doing it for so long. So anyway, that's a good question. So interesting to see the British pound on the ropes. Perhaps the Bobo effect. It's the after. Like I say, that I think. Let me have a look at the cable. Actually, I'll bring it up and we'll have a little brief chat about it. And there's something actually that leads me on to something else in a minute, actually, which I was about to talk about. Yeah, I mean, if we look at the 4 hour, okay, yeah, like I say, there is a lot of the bearish momentum with the cable, in my opinion, was led by obviously that the fact that it wasn't like a clean win for Johnson. So I mean, that's why it is testing on that. But yeah, it is on the ropes. Okay, obviously some of this is down to dollar strength now as well. Don't forget. So it's trading at 123.76. So it'll be interesting to see next week, because let me lead on to what's happening next week, and we can talk about it a bit more. Because next week next week, okay, is just as exciting as this week. We have UK GDP, UK claimant count, UK unemployment, German CPI, they're at 7.9%, US retail sales, and the two big ones, US interest rate decisions and UK interest rate decisions. So that is going to be really interesting to look at. Okay, so yeah, US interest rate decisions and UK. So if all eyes are going to be on the Fed and the Bank of England. So the fact that the cable is currently trading at 123.79, maybe the anticipation of what might be happening next week. But we'll talk about that more next week. So we've got a big week ahead of us. Okay, we've just had a cracking week. We got another cracking week on its way. So hopefully you can join me for that. Don't forget, I'm usually go online at twice a day, 8 a.m. UTC, okay, and 1 p.m. UTC. Monday, however, thank you very much. It's a very nice comment. Great week for your watch-alongs. Can't wait to watch you next week. Very nice. It sounds like I almost paid her to say it. Very nice comment. Thank you. So I'm going to say. So yes, next week I'll be, like I said, we'll be going on at 8 a.m. UTC and at 1 p.m. UTC. The only difference will be on Monday. I only will be going live at 1 p.m. UTC. Okay, and so I'll only be live once on Monday, but I will be live normally twice a day, rest of the week. Plus, I will do a watch along again. I'm not sure which one I'm going to do it with. I'm going to have a look at it and decide which one I think is going to be the most interesting. I mean, both the US interest rate decision and UK interest rate decision is going to be really interesting. So they're going to be two events I'm going to watch quite closely anyway. But big week ahead. So remember, only Monday I'll be online at 1 p.m. UTC only, but I will be going live twice every other day. And on Monday I'll be doing a little special on some of these events coming up. So what to look out for and talk a little bit about them. Okay. Now remember. And thank you, everybody who's asked me questions and interacted and been with me this week. It's been an absolute pleasure. I really, really appreciate it. Please keep coming. I hope you're liking it. And please always feel free to ask me questions. And thank you again for all those who've attended my little lives. Now, as I always say, of course, if you're watching me on Facebook and you like it, give us a follow. If you're watching me on YouTube and you like it, give us a subscribe if you like. Hit the notification button next time you know I'm going live. If you enjoyed this episode and you found it insightful, interesting, and you've put up with me, then give me one of these. It's Friday. It'll make me smile. But anyway, till then, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be treated as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.